Hello, traders. It is 8:02 a.m. Chicago time on Thursday, the 13th of February, 2020. This is episode number 1692. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, this morning, risk off sentiment as news hits us out of China. The news is that the person who was responsible, who's been set by the Communist Party in China, responsible for the province from which the coronavirus had emanated, that person got replaced yesterday. And also the numbers that China has reported are higher than what was thought. China reports 15,152 new coronavirus cases. 15,152 coronavirus cases. 19 more yesterday. That's rise from 254 to 1,367. Pretty big margin of error, so to speak. Um, Singapore sees a big jump. Cases from 8 to 58. Japan reports one death. The market dropped immediately and has not seen a return since. And that's where we stand. It's a fear-based move here, a news-based move, and that's what things are looking like. Not sure if I did the disclaimer. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So that's where we stand currently. What is going on with my charts here? Um, and so that's where we stand today. Something's up with my charts. I just reset. This is not a timely thing to happen. In terms of what's ahead for the day, well, we already got the inflation rate and core inflation. Inflation rate came in a little bit higher, 2.5% versus 2.4. The core inflation is at 2.3% in line. The initial claims came in a little bit better at 205,000 versus 214 expected. And then there's really not much else on deck for today. 30-year bond auction at noon Central, 1 Eastern. Feds Williams at 4:30 Central, 5:30 Eastern. That's pretty much it. Let's switch gears and look at what was expected yesterday. Yesterday, we were opening right on the edge of new all-time highs, that big area. I talked about the local double top at 74.50, and that being a very high probability of taking that out right here. So the primary scenario was expected to push through that high, go sideways, and then grind its way into 84. That did not happen. Secondary scenario, push up, pull back towards 66 and hold sideways. And the third is a push down and an aggressive up move. Here's what actually happened yesterday. Was basically a combination of scenario 1 and 2. It did not grind to 88, but it did push immediately through that 74.50 and then rotate down. You could see that the rotations are bigger on the short side. And we went into this kind of terrible chop. It's really a scalper's paradise. And it took forever to break the IB. Generally, you break the IB, a um, high probability that the IB would be broken within the third or fourth bracket of the day. Each bracket's a half hour, so it's expected that the IB would be broken between 9:30 and 10:30 Eastern, most likely. 9:30 and 10:30 Central, 10:30 to 11:30 Eastern, and this took all afternoon. This is how sluggish the trade was. Volume wasn't all that great. We did finish up with 974,000, I believe, or 949,000 contracts, which isn't too bad, but overall, it was a pretty sluggish trading day. This is how the day worked out. It was really a balanced day that broke higher on the close, and we ended up with a double top, a local double top, uh, a local double top near the close here. So the expectation was for a higher high on the reopen. Okay, so a higher high on the reopen. That's a high probability. Let's take a look at the reopen. There it is. It opens back up and it pushes and makes a higher high before the news hits. And there is the drop. That news was worth almost 20 points. Um, Almost 20 points, pulls back, clearly an impulsive move down. So we're looking for a pullback to short. Mid pullback is the farthest point we would want to see for that continuation, and then it rolls over. It rolls down into the lows, and here's another mid test. So there's one there, and there's one there. The profile shows a little bit of liquidation, but overall, I have to say, it's, we would expect a market to finish looking like this. The news comes out, it drops very quickly, and then it starts forming this B shape near the lows, the point of control near the lows, and that's not what we have today. Point of control is at 63-ish, 64-ish. It looks like 64, 64 and a quarter, and it's just sitting sideways here. But we traded throughout this, so there was a two-way battle in the European session on the way down. So as this was moving down, the market was clearly fighting it. That's what we gleaned from the overnight session. Very high volume, about almost 4 times what we would normally expect, 461,000. So overall, a pretty active session. I expect that to carry forward coming into today. Looking at the big picture, the composite, the market made all-time highs yesterday after trying to sell the day before, looking pretty strong, and is lower. But look at where it is compared to the all-time high. We're really not off by that much, and this market has been buying every dip. So I would still caution short sellers and people getting excited about the short not to get carried, not to overdo it. So that's where we stand. Let's take a look at what we're expecting this morning. This morning, we're opening right on top of the point of control, as I said, 64. So in the overnight session, the expectation here, and we're opening right in this range. So the first thing we got to do here is put up a profile that encompasses both days to see where the action is. Let me color that in. Let's not do it thin. So you can see there's quite a bit of volume up here in the 73. Remember 74.50 was a big area, big area that we pushed through. The expectation this morning, open auction, responsive buying. I'm looking for responsive buying back into that 68, 69 area. I'm looking for the market to fight a little bit, but I am looking for it to come back to the 73 and 74, 50, 75, and then hold steady. I'm looking for a responsive market. We are in balance still despite the sell-off, and the sell-off was really pretty much short-lived. I mean, look at where we are, and we're basically at the mid of the session. If the sellers are putting a lid on it, if the buyers are not interested, prices are not expected to be here by the beginning of the day session. Secondary open auction. Oops. Yep, secondary open auction responsive buying, tries to poke in, impulse down, back into the point of control, and then starts to break through the 60 area and move towards 57 and then potentially push to 52. That would be the target down. If we can get through the 60, my plan is to hang in there for the 52, 53 area. That's the secondary. We are opening in a gap yet again. So open, early sellers, impulse up, consolidate at the prior day's low, again, that 68, 69 area, push into the point of control, and then cross into the value area high up here, consolidate before it resumes its uptrend yet again. Again, this is driven by outside news, and we have blown off the outside news multiple days in a row. Um, so I'm not a believer, and I'm not seeing any structural change. Sorry, my throat's burning. I'm not seeing any structural change that would lead me to believe that the buyers are done. So to me, scenario one is a high probability, but if it fails to regain yesterday's range, then it's a good short. Look for 60-50 initially as the key initial target, and then if it does not hold the 60-50 and pushes through, then we're very much looking into 53 as a test from above. Okay. I'll leave you with those thoughts. I don't have a bookmap up and running. There have been some issues with it that's been looked into. A very, very stable platform, but it has to do with my feed, not the software. So I can't show you that, but you have your three scenarios. Hopefully you're making your own. Good luck today, and I'll catch you tomorrow morning. Take care.